Good morning, everybody. It is June 16. It is about 8:40 in the morning here, and just sitting down to do some analysis for the day. Yesterday was kind of an interesting day, and I was pretty happy with how my trading went. Um, let's see here. So yesterday was here, and this was around the area where I had a trade that I missed by just like fractions of a point. I think it was just like a tick or two. Um, and, that was sort of a bummer, but no worries there. Took a little trade down here. I took it on both my paper account, which you can see here, which ended up hitting for a nice little win for a quick little scalp. Also took it live, and I adjusted my targets on my live trade and just missed my target, so I ended up taking a stop live, but no big deal. What I ended up doing, and I have a video of this posted on the channel, when my original short or long here, I was looking to just catch a quick long reaction, which again I did here get it in the paper account. When that failed, I just simply switched my bias, identified the key level to short from. I think I ended up shorting, something like this. And this is a 30-minute, or this is a 5-minute chart. I think I was on a 1-minute chart, but in my live account, ended up taking the short down, so made up for that loss, got me back to break even. And then this level down here, gave you this yesterday morning. I said there's a really high probability that we're going to return to that level. And we had that level, was really important for two reasons. So one is this red thinner dashed line that you can see was just the key level that we identified from this consolidation and the push up. And when you get this was such a strong push up, so much buying imbalance here. There's high probability of these kind of moves here getting retraced, right? These bars are what we call single print bars. And what that means is there's no overlap with the bars before them and after them, right? Just these huge, right? Like what I mean is, all right, let's zoom in here. This is important. So like when you see this, the top of this candle here and the bottom of this candle here, and it's lagging in a weird way, there's no overlap between those two, right? As opposed to like, and even down here, there's no overlap. As you get, some of these weaker trends, you'll start to see a lot more overlapping candles. But this was such a strong push. Even down here, even these small candles, there's little gaps, right? There's just little areas where there's no overlap from there to there, right? Just a little teeny gap there. And then again, now this one, this is where we have a little bit of consolidation came in here. So see how this wick and this wick, let me get rid of some of these other ones so you can see what I'm talking about. Right, so the two wicks that are surrounding this candle, where's my oval? Why are my eyeballs not working? There we go. Okay, so this candle is sort of our candle in question, and the wick before it and the wick after it, they overlap, okay? When you see candles instead, like this one, okay, and then notice that the wick before it here and the wick after it do not overlap in any way, okay? So that's indicative, I'm sorry, the wick before it would have been this one. That's indicative of strong buying imbalance, right? The buyers are just really, really aggressively pushing that market up with market orders. And that's really key to understand, right? The only way you're going to create a movement like that is with a market order. And when that happens, there are people with limit orders that get left behind. And what that means in the terms of an auction, it means there is residual demand that's still down here, right? The auction never completed. Just some aggressive buyers came in and pushed it, but there's still probably people wanting to get in at these levels. And that means there could also be people, willing to sell at those levels. We don't know. And it just makes a really high probability that moves like that get retraced. You can even see it here. See this big candle right here? right? Why is that not working? Might have to reboot my trading view this morning. So this big candle right here, again, big buying in, or selling imbalance. See, there's a huge gap from this wick to this wick. And then notice that the majority of that got retraced, right? So the vast majority of that move got retraced. And that's really typical, really, really typical. So where that leaves us is what I did, by the way. It was getting towards lunchtime. I like to take a break. I like to get some exercise. So I entered a limit order just right above this level. So this level here is at 42.2875. I put my limit order at 42.29 just to kind of ensure I got in. Put my stop below here. Just went for a one-to-one risk reward. And then I left and I went to the skate park and just did some skateboarding because trying to reteach myself some skills from my youth. And we can see that, by the time I got to the park, my order was entered and really quickly got out with a nice little gain. And that put me, so my first trade was a loss, and then my second two trades were a win. And that gave me my nice little profit for the day. I was happy with that and sort of done for the day. So this level was interesting because the bottom of the candle was literally 3 ticks away from the level that I gave you. And that was really like a spoon-fed kind of trade. So I hope some of you guys took advantage of that, even if you're not like me. And I can kind of enter on these things. I'm pretty confident, but even if you wait for confirmation, this really gave you the bottom of the market, and like there we are. And so what's again interesting, and I feel like a broken record at this point because this market is just so uh, kind of tedious, I guess, is the way to explain it. It's great for scalping, but for swing and stuff, it's pretty brutal. We've been talking about this same area for the past 7 days where value hasn't really changed at all, right? So value represented by here and here, right? And this profile where we are getting that value area from, that, that hasn't really changed. The profile hasn't really changed since last Tuesday. So in over a week, last Tuesday was, whatever the date was, somewhere around here, I'm not sure. But we can see, value was slightly lower. The bottom was relatively the same. The top was just slightly lower. So we're starting to build more value up here, which is why we are remaining bullish. I mean, I have been loading up on my long-term positions as it does appear that we're ready for a rally. I could be totally wrong about that. But the fact that we are starting, you can see the value has migrated upward a little bit. But look where the point of control was from, this is 1, 2, 3, 4 days ago, 4 trading days ago. Maybe even if we go one more back, still right there. See the teal dotted line? Okay. Notice how that almost lines up exactly too with that key area we gave yesterday. So we had tons of confluence on that area. That's why I was super confident about taking that trade. We just had this buying imbalance that we sort of anticipated was going to get filled. We had a key area of demand that preceded that buying imbalance, which is usually where institutions are loading up their position, and then they hit the market button to push the market up and put those positions into profit, right? That's how the market gets moved. So even going back like all these days, let's go back one day further, okay, now it's slightly different there, but really, not a whole lot has changed. Bring us all the way to the present moment and look where our point of control is. It's exactly the same. Like nothing has really changed from a value standpoint. So price has moved, we get things like you can visualize a trend line here. I don't use trend lines a ton in my trading, but they are helpful for some people. So you can sort of visualize that trend line there. But value hasn't really changed. So I'm bullish, but again, I remain cautious. I did close out my hedges, but I remain cautious. The other reason that I remain cautious is these levels down here may still need to get kind of mitigated a little bit. Not so much this top one really, because we did have some already reaction to that, but really specifically this level right here, this is an accumulation that preceded this very strong push up. Okay. So what I'm talking about is this push up right here. And we have that little accumulation period that preceded that. And a lot of times those accumulation periods need to get tested. And this one has not been tested. It's kind of like a naked level. And that's at 41.94.50, so right around that 4,200 level. Now, I don't know if it needs to really be dealt with. I mean, there's just been already so much price action down there, but it is a possibility that before we push up more, that we come down and we test this. This one's another one that's like a maybe. This one's another one that's maybe. I'm not convinced we're going to come all the way down here, but if we do, those are going to be probably the stops along the way. So right now, I am still bullish. Big picture, right? We're still got these rising lows, and we're just looking to see what happens essentially. So the only real important level I have for you guys right now is this level here at 42.47.75. I think if we do start to make our way up today, that this will be a level that if you're long, I would look to take profit before that level. It's very likely the market could get some sort of reaction there. And since we don't know how big that reaction may be, if you're in profit and you're long, at least maybe shave off some of your position. If it's a short term, I'm talking an intraday long here, not a swing or anything like that, or a long-term position. So if we hit that level on my intraday, if I'm intraday long, I'd be looking to get out before that level. The other thing that I'd be looking to do is if price comes up to this level, and this is probably what I'll do, is I'd be looking to get a little short scalp there. And again, I say little for a reason, because I'm not expecting the market to completely reverse here, but I am expecting a reaction. And so a lot of times you can do something, like this, where you just get your stop over that high, and then you go for at least a 1-to-1. I'm doing all 1-to-1 ratios this week. It's my trading plan for the week. Doesn't mean you have to, it's just my plan for the week. It's what I said I was going to do. And so you can do something like that and expect to get at least, a reaction like this, right? It's not like the market hit this and just went off and reversed. We got enough of a reaction, more than enough of a reaction, to really give ourselves a nice little profit there. And so we just expect the same thing here. It's a little reaction. Or the other option, of course, is that we blow our way through that level, right? If the market gets a strong rally, for instance, after the Fed meeting today, we have Fed minutes today. If we get a strong rally, come back down, retest the top of that, if we blow through it. And this I would only consider valid if we don't get a reaction to this from the downside. So if that first idea just gets no reaction at all and price just blasts right through, then we'd look in that area, maybe not at the exact level, but look in that area for an opportunity to long. So that's kind of the level I'm looking at today. Obviously we want these lows to hold. We definitely want these lows to hold. And then this is the level I'm looking at for today. And this, by the way, if the market does do this, especially after the Fed meeting, because we may just be, we've had this nice strong price action. We had the inflation report at the end of last week, which helped to facilitate some of this. But also today we have the Fed meeting, and it's very, very common for the market to just sort of tread water leading up to Fed meetings. And so we could have a very flat open today, or we could, do a little bit of movement in one direction, and then probably leading up to the minutes for the Fed, which is, I think it's 1 p.m. It's either 1 or 2 p.m. Eastern. Leading up to those minutes, it's very common that the market might go flat a little bit. But if we push above this, and then we come back and test here, this would also be a good area to enter for a swing long as well. So you can use this as an intraday for a scalp, but not a bad idea, not a bad place if the market starts to really rally. If this is sort of like the pause that refreshes, and this pullback is just, waiting on those Fed minutes, and if the Fed comes out dovish and everything looks, good as far as what the market has already baked in, and if we get a rally, then that would be something I would consider I added personally, I added a half position of SSO down here, um, because this was a really key bottom to me. And so I wanted to start building up my longs to try and capture some of that rally. SSO is the double beta ETF of the S&P 500, so it's just an easy way to play the S&P 500 with stock, and it moves twice as aggressively as SPY, so you can just get more percentage gains. So I use that for like intermediate term trends to just capture some of that movement. And I'd be looking to maybe add in and make that a full position if the market does something like that. Can't say for sure. And again, I do not recommend you follow my trades. I recommend you do your own advice. I mention my own trades just for educational purposes. And so, the people can learn from what I do. I think blindly following somebody else's trades generally is not a good idea. And even if that person is a winning trader, a lot of times people who blindly follow the trades do not get the same P&L because you don't necessarily get in or out at the same times or levels. Or you might miss trades because you're away from your computer or whatever. So definitely, you can follow my trades for educational purposes, but plan your own trades. Like I took this level, I gave you this level yesterday. I used my entry criteria and my entry style and my stop loss criteria. You definitely set your own. You have your own trading style. The thing about the way that I kind of try to teach people is that there's so many different ways you can enter and exit the market. Um, it's more about how you understand the movement of the market and your logic behind your moves, less about following a rote mechanical system. Because I spent the last year working on trading algorithms, and if you think you're going to easily find a purely mechanical system that you can just follow and make consistent money, you're looking for the holy grail. And if such a system existed, imagine what you can market that system for, right? Just like an easy way to basically print money. It would be the most marketable thing in the world. So um, stop trying to search for the holy grail. Mechanical rules are good to help you, but there always is going to be some discretion if you want to consistently make money. And I'm not saying that mechanical rules don't work at all. There are automated and algorithmic trading systems that are profitable, but they tend to have longer periods of either flat equity or drawdown equity compared to a skilled manual trader, because our brain is the most powerful computer of all, and we want to use it. Um, so anyway, yeah, that's what I'm looking at. There's not like the market didn't give us a ton to really like. If you look at this is a 30-minute chart, and we just kind of moved down with a few little retracements along the way, and then moved up with no retracement, and then did all this in the post market, and then down with basically no retracement, and then we just kind of went flat, and we've just been flat since. So we don't have a ton. Depending on how the market moves out of this, we may find some key levels from within this consolidation. So we'll look to that as well. So that's kind of all I got for you today. I do just want to kind of look at NASDAQ real quick. This was sort of the corresponding level on the NASDAQ right here. I circled it, and I kind of said to my group right as this candle was finishing being formed, I said, I think this could be the bottom of the NASDAQ. Um, and we got that little tiny probe there, but this is basically the corresponding level. So we had consolidation, a lot of volume built up here, accumulation of positions, and then this is the corresponding rally to the S&P's rally. It doesn't look quite as strong on the NASDAQ, but the NASDAQ also didn't retrace as much prior to it. It stayed stronger leading up to that point. And so we kind of want these levels to hold. So, we kind of want these levels to hold. And so that could be the bottom. I've got an alert set for myself. If we start to get some bullish price action here, some significant higher lows, to consider, again, entering like a swing trade position from these areas. But I want some sort of confirmation for that, just because the market has been so indecisive lately, that I want some kind of confirmation, and then I'll be looking to get in long there as well. Yeah. All right. I'm going to get ready for the trading day. Hope you guys have a great trading day ahead of yourselves as well, and we'll check in with you later on.